Welcome to the part 15 of the series on volume spread analysis. In this section, we are going to look at derived or combination signals in the VPA 5.0 trading view script or the Amibroker AFL. Before we proceed to the derived or combination signals, let's quickly review what we learned so far, the standard textbook VSA signs of strength or weakness. Now the signs of strength or the SOS are the selling climax, stopping volume, effort to move up bar, reverse upthrust bar, the test for supply, no supply bar, and the 2-bar reversal. And the signs of weakness are the buying climax, upthrust bar, pseudo upthrust bar, effort to fall bar, no demand bar, and the 2-bar reversal. In fact, the 2-bar reversal is not a classical VSA textbook signal. It is more of a combination signal because it depends on a sequence of price actions. So in addition to the standard VSA signs of strength and signs of weakness, I've tried to make more signals based on my experience or study, to add some signals based on some derivation or the combination of signals, so that it is easier for the people to understand the strength or weakness instead of trying to interpret it on their own. So the derived signals are based on the failure or negation of a sign of strength or a sign of weakness. Also, confirmation of a sign of strength or sign of weakness is also a signal. So these are the derived signals. Whereas a combination signal is based on a sequence of conditions and the subsequent price actions. For example, the 2-bar reversal is based on the previous 4 bars and the action of the current bar in relation to the previous bar. So it is a combination signal. It is not a typical VSA classical sign of strength or sign of weakness. So we will now look at in detail the derived and the combination signals. Now let's look at the first derived signal. So this signal is failure of an SOS. That means a failure of a sign of strength. That would obviously mean weakness, right? So this signal is again a sign of weakness, which is the failure of an effort to move up bar here. In trading view, this signal is referred as EUF, effort to move up failed. As you can see here, there was an effort to push the prices up, but the next bar was again a down bar here. So it was the widespread bar with increased volume. So this negated the bullishness of this bar, the effort to move up bar. So it brought in more weakness here. Now, what do we look for when we see this EUF bar? So we need to look at the volume on the 2 bars and also the spread on the 2 bars, and look at the subsequent bars price action to evaluate the strength or weakness. As you can see in this example, the effort to move up bar was a widespread bar on increased volume, but the next bar was a down bar, but the close was in the middle. That means there was indeed some demand coming here. So though technically there is projecting weakness, but the weakness is not profound. So we need to look at the subsequent bars. So the next bar did not move the prices much down. It was almost an equal fight between the demand and supply. But the next bar you can see it moved up. And that would mean that the demand dominated the supply and it started moving up. So this weakness projected by the EUF bar was not profound and the strength continued. The next signal is again a derived signal. It is a failure of a sign of weakness, which is of course a sign of strength. So the sign of strength is a failure of an effort to move down bar, exactly opposite to the of the signal 1 here. And in trading view, the signal is called EDF. We can see there was a big push down here on a widespread effort to move down bar here. The next bar was an up bar here on volume which is little less than the previous bar. So you can see it projected some weakness. It tried to negate the weakness of this ED bar. So what do we look for when we see such a bar? Again, we need to look at the volume on the two bars and also the spread of the two bars and look at the subsequent bar's price action to evaluate the strength or the weakness. In this case, you can see the effort to move down bar was a widespread bar, but the EDF bar was on a reduced volume and also the spread was smaller here. So the strength projected by the CDF bar is not very substantial. So we need to see how the subsequent bars are behaving. The next bar, of course, it opened above, but it closed down here, but the spread was very small, indicating there was a lot of tussle between the demand and the supply. That way, spread remained very narrow. But the next bar shows there were more weakness coming in here, but the bar again opened in the or closed in the middle and the spread was not too much, again indicating the demand trying to put a fight on the supply. But the next bar clearly the supply dominated and pushed the prices down. So this way you can read the price action of the subsequent bars to see if the strength given by the EDF will stand or it will be negated. Now let's look at some real life examples of the EUF and EDF bars. Now let us look at an example of the EUF and EDF bars. I have the chart of Asahi India Glass. It's a daily chart, and as usual I will be using the replay mode for better illustration. So this is a daily chart and our chart starts from the 12th of October 2021. So let us see how the prices play out. You can see that the stock was moving sideways for quite a few months. Now we have an U bar here, followed by another U bar. So some bullishness coming is breaking out of this range here. Now we have a very good U bar, really powerful U bar with a very wide spread and much increased volume, one more U bar, so the stock is gathering momentum. But now you have a UF bar, that the effort to move up has failed. So whatever the bullishness caused by this U bar has been negated by this UF bar. So what we need to do is to look at the subsequent bars price action to see if the strength will recover or the weakness will continue. So let me draw the line at the high of the EU bar here. The prices have to move up beyond this line or break above this line in order to have further up move. So let us see if that happens or the weakness will persist. The next bar is again an up bar, almost negating the weakness of the UF bar here. It is moving sideways, some consolidation is coming here, some supply coming, and now here is an effort to push the prices down with an ED bar here. Here you have a EDF bar, that is the effort to move down has failed. The weakness, whatever is portrayed by this ED bar, has been negated by this failure of the EDF bar. But here you can see there has been a lot of supply as well, as the bar closed in near the middle. So here again I will draw a line at the low of the ED bar here. So now it is clear that for the prices to go up, we need to break above this line, the high of the EU bar here, and in order to go down, we need to break below this line, which is the low of the ED bar. So let us see what happens. It is not breaking below the low of the ED bar here. So as you can see, it is moving sideways, consolidating. Now there's an effort to break above this high of this U bar here, but still there is some supply going here, as you can see. There are the long wicks here showing supply still present, and I will extend this line a little more. Let us see if the prices sustain above this line and move up. Again, some effort to move up, but that is not getting succeeded. It's moving sideways here. There's weakness. Every time it's trying to move up, it is being defeated. Supplies coming in here, as you can see here. Again, trying an effort to move up, does not succeed. One more effort, good effort to move up here, but the prices closed little low here, indicating there has been supply, but it is almost like an effort to move up bar. You can see technically it did not close near the high, so the script does not capture it as an EU bar, but in all price action it is definitely a EU bar here. And the next bar totally negates the bullishness of this EU-like bar. So here it is really a combination of an EU and UF bars here. So the weakness of this UF bar is coming here. So we saw a down bar here. Finally, the price is pushed below this line, the high of the UO bar here. Then it's a real push down here with an ED bar. This weakness of the ED bar is again being negated by this EDF bar, the effort to move down fail bar here. So again, let me draw a line here. So this is our important line now. Below this bar, you can expect the price to go down further and more weakness coming here. So as long as the prices stay above this line, we are safe. And let's see how the prices move. The strength of this EDF bar is not being followed up. As you can see, two small down bars here. So the supply is pushing it down now below this, the low of this ED bar here. So you can expect the prices go down further. So you can see the prices have come down. Like this, you can use the EDF and UF bars and the high end of the U bar and the low of the ED bar to ascertain the direction which the stock prices will take in the the near future. So these are good tools to evaluate the direction of the prices. So these derived indicators, EUF and EDF, are good tools to have in the arsenal of VSA. Now we are going to look at two more derived signals. The third derived signal is a confirmation of a sign of weakness. So whenever we see a sign of weakness, we need to have confirmation. So this signal is actually a confirmation of a sign of weakness. The confirmation of weakness after an upthrust bar. In the trading view, it is shown as UT2. The signal is called UT2. So the condition is that it is a down bar with average to above average spread after an upthrust bar, or it's a down bar on high volume after a upthrust bar. The next signal is again a confirmation of NSOW. Here in this case, it's a confirmation of weakness after a pseudo upthrust bar. First we saw a confirmation of an upthrust bar. Now this is a confirmation of weakness after a pseudo upthrust bar. In trading view, the signal is shown as PUC, pseudo upthrust bar confirmation. The conditions are it should be a down bar with average to above average spread after a pseudo upthrust bar, or it's a down bar on high volume after a pseudo upthrust bar. Now let's look at some examples. Let us quickly look at an example of the UT2 and PUC bars here. I have a chart of KPR mills. can see the stock is trying to move up and it encountered a UT bar here. The next bar was an UT2 bar, which is a confirmation of the weakness or the bearishness caused by the UT bar. And as you can see, the weakness did come and the stock could not move up further and it was moving sideways till it overcame the shadow of supply of the UT bar here. As you can see here, it tried to go up here but again tested this supply region and then finally started moving up here. Here again we saw an UT bar here, an upthrust bar, and the next bar was a confirmation, a UT2 bar, but this weakness does not sustain and the demand overcame the supply here. As we can see, this is an up bar negating the weakness of the or the confirmation of the UT2 bar, and once very soon it took out the supply region of the UT bar and it started moving up further. So this is an example of UT2 bar. Now let's look at an example of the PUC bar. The PUC bar is similar to the UT2 bar. The previous bar should be a pseudo-upthrust bar, and that the PUC bar confirms the weakness of the pseudo-upthrust bar. I have the chart of the Aditya Birla fashions. As you can see, the stock was moving up and we encountered a pseudo-upthrust bar, and that weakness was confirmed by the next bar, which is a PUC bar. So the weakness was real, and as you can see, the stock was pushed down a lot. Similarly, with another example here, the stock was moving up here. Again, a pseudo-upthrust bar here. The next bar confirmed the weakness of the pseudo-upthrust bar, and the stock did move down. The weakness became very profound and it did move down here. So this is another good example of the PUC bar. You would find that the PUC bars are more common than the UT2. The UT2 are rare, and then the PUC bars are more commonly found in most of the charts. This video has run into much more time than I was expecting, so we'll quickly summarize and then continue in the next video for the combination signals. So let's quickly summarize what we learned in this video. The derived signal is a signal based on either failure or negation of a SOS or SOW. The examples are EUF and the EDF. And it can also be a confirmation of an SOS or an SOW. You have the UT2 and PUF bars. The combination signal is a signal based on a sequence of conditions and the subsequent price action. The EUF and EDF and the levels of corresponding EU and ED bars levels are quite helpful tools for us to see where the market is heading. We will continue in the next part, this is part 16, the part 2 of the derived and combination signals in VPA 5.0. We will be dealing with the combination signals in VPA 5.0. In order to get notified for release of the future parts and videos, do subscribe to this channel. In case you find this video useful, please do press the like button.